Most investors believe success comes from chasing what is popular. They follow headlines, trends, and excitement. They buy what everyone is talking about. They say Winfield spreads. Warren Buffett does the opposite. Buffett believes the stock market is a device for transferring money from the impatient to the patient. Most investors are impatient. They want fast gains. They want instant results. They want excitement. Buffett avoids excitement. He avoids noise. When investors chase hot stocks, they often overpay. Price becomes disconnected from value. Speculation replaces analysis. Emotion replaces logic. Buffett believes price is what you pay, but value is what you get. Most investors focus only on price. They assume rising prices mean quality. Buffett assumes rising prices increase risk. During bubbles, investors feel smart. They believe this time is different. Buffett hears danger. When technology stocks exploded in the late 1990s, Buffett stayed away. People mocked him. They said he didn't understand modern markets. He ignored them. When the bubble burst, billions vanished. Buffett survived. Buffett understands that the crowd is usually wrong at extremes. When everyone is optimistic, risk is highest. When everyone is fearful, opportunity appears. Most investors chase certainty. Buffett accepts uncertainty. He knows markets fluctuate. He knows emotions distort judgment. He knows discipline beats intelligence. Buffett avoids what most investors chase because chasing creates competition. Competition drives prices up. High prices reduce future returns. He prefers neglected areas. He prefers boredom. He prefers simplicity. Buffett once said he looks for businesses so good that even an idiot could run them. Most investors look for clever ideas. Buffett looks for durable ones. This mindset is the foundation of his success. Avoiding the crowd protects capital. Protecting capital allows compounding. And compounding is Buffett. Es real. Secret. Hot trends attract attention. Attention attracts money. Money attracts speculation. Buffett avoids trends because trends distort reality. They promise easy wealth. They hide real risk. Most investors ask, "What's going up?" Buffett asks, "What is this business worth?" Trends create stories. Stories create excitement. Excitement clouds judgment. Buffett dislikes stories without numbers. He dislikes projections without evidence. He dislikes complexity that hides weakness. When investors chase trends, they ignore fundamentals. They stop asking about profits. They stop asking about debt. They stop asking about competition. Buffett focuses on cash flow. He focuses on earnings power. He focuses on long-term economics. Trends often rely on future perfection. Buffett invests assuming imperfection. If a business must grow rapidly to justify its price, Buffett walks away. If a business requires constant innovation to survive, Buffett is cautious. He prefers businesses with pricing power. He prefers brands people trust. He prefers companies that can raise prices without losing customers. Trendy companies often burn cash. Buffett prefers companies that generate cash. He understands that markets overestimate short-term change. They underestimate long-term consistency. Buffett avoids trends because they collapse without warning. What rises quickly often falls faster. He doesn't need to predict the future. He only needs to avoid stupidity. Buffett once said, investing should be like watching grass grow. If you want excitement, go to Las Vegas. Most investors confuse motion with progress. Buffett values stillness. By avoiding trends, he avoids emotional decisions. By avoiding emotional decisions, he avoids permanent losses. This discipline separates investors from speculators. Patience is Buffett's greatest advantage. Most investors lack it. They check prices daily. They react instantly. They panic quickly. Buffett waits. He is willing to do nothing for years. He waits for obvious opportunities. He waits for unfair prices. When markets fall, investors panic. Buffett prepares. He keeps cash when others are fully invested. He buys when fear creates discount. Buffett avoids chasing because chasing removes patience. It forces action. It forces mistakes. He believes an activity is often the best decision. Doing nothing is a strategy. Patience allows compounding to work. Compounding requires time. Interrupting compounding destroys returns. Buffett holds businesses, not tickers. He holds for decades. Most investors trade pieces of paper. Buffett owned businesses. When you own a business, daily price changes don't matter. What matters is long-term performance. Buffett avoids short-term thinking. Short-term thinking creates stress. Stress creates poor decisions. He is not trying to beat the market this year. He is trying to build wealth over a lifetime. This perspective allows him to ignore noise. Noise is what most investors check. By ignoring noise, Buffett preserves clarity. Most investors believe volatility equals risk. Buffett disagrees. He believes risk is losing money permanently. Volatility creates opportunity. Permanent loss destroys wealth. When investors chase rising stocks, they increase downside risk. When Buffett buys undervalued businesses, he reduces Italiano. He demanded a margin of safety. He buys with room for error. Most investors assume they are right. Buffett assumes he could be wrong. This humility protects him. He avoids leverage. He avoids complexity. He avoids anything he doesn't fully understand. If he can't explain a business in simple terms, he won't buy it. Investors chase innovation. Buffett chases reliability. He invests in insurance, consumer goods, and utilities. Boring businesses. Predictable businesses. Predictability reduces risk. Buffett knows survival comes first. You can't compound if you're wiped out. Avoiding what others chase keeps him alive in the game. Buffett's success is not about intelligence. It's about temperament. He controls emotion. He resists temptation. He ignores the crowd. Most investors want to look smart. Buffett wants to be right. He doesn't care about being early. He cares about being correct. He avoids what most investors chase because chasing is a trap. It feeds ego. It feeds fear. Buffett invests with humility. He knows what he knows. He avoids what he doesn't. This discipline compounds quietly. Year after year, decade after decade. The lesson is simple. You don't need excitement to build wealth. You need patience. You need discipline. You need clarity. And sometimes the smartest move is to walk away while everyone else is running toward the noise. Most teenagers think money is about making it fast. Warren Buffett would disagree. Suggestion 1. Don't follow the crowd just to fit in. If everyone is buying something just because it's popular, stop and think. Popularity does not mean quality. This applies to stocks, clothes, gadgets, and even life choices. Learn to pause before copying others. Suggestion 2. Learn patience early. Buffett became rich by waiting, not rushing. Teenagers often want results immediately. But real success takes time. Whether it's saving money, learning a skill, or building good habits, patience always wins. Suggestion 3. Avoid get-rich-quick ideas. If something promises easy money, it is usually risky. Buffett avoids things he doesn't fully understand. You should too. If you can't explain how something makes money, don't put your money into it. Suggestion 4. Focus on value, not hype. Hype is excitement without proof. Value is usefulness that lasts. Before spending money, ask yourself if it will still matter next year. This habit will save you from wasting money later in life. Suggestion 5. Learn before you earn. Buffett reads every day. Teenagers should build the habit of learning. Read books. Watch educational videos. Learn how money works before trying to make it. Suggestion 6. Don't be afraid to be bored. Boring habits build strong futures. Saving money is boring. Studying is boring. Consistency is boring. But boring habits create extraordinary results. Suggestion 7. Control emotions. Buffett stays calm when others panic. Teenagers often act on emotion. Learning to stay calm gives you an advantage in school, friendships, and money. Suggestion 8. Protect what you have. Buffett believes avoiding loss is more important than chasing gains. Save part of any money you get. Don't spend everything just because you can. Building this habit early changes your future. Suggestion 9. Think long term. Don't ask, what's cool now? Ask, will this help me in 5 years? Long-term thinking separates successful people from average ones. Suggestion 10. You don't need to be flashy to be successful. Buffett lives simply. Real success is quiet. It doesn't need approval from others. Final message for teenagers. You don't need to chase trends to win. You need patience. You need discipline. You need confidence to think differently. Start small. Think long. And remember, the crowd is loud, but the smart path is often quiet.